Corporate Accounting, Unit 1, Issue of Shares. In this session, we will be discussing about meaning and types of shares. A company, being an artificial person, cannot generate its own capital, which has necessarily to be collected from several persons. These persons are known as shareholders, and the amount contributed by them is called as share capital. Since the number of shareholders are very large, a separate capital account cannot be opened for each one of them. Hence, innumerable streams of capital contribution merge their identities in a common capital account called as share capital account. Now, let us have a look at the characteristics of a company. A company is a distinct legal person existing independently of its members. The liability of the members is limited to the extent of the face value of shares held by them. It has a perpetual succession, that is, the members of the company may keep on changing from time to time, but this does not affect the company's continuity. The shares of a company are freely transferable except in case of a private limited company. A company, being a legal person, is capable of owning, enjoying, and disposing of the property in its own name. A company, also being a separate body, can sue and be sued in its own name. Now, let's have a look at the meaning of shares. A share is a share in the share capital. A share is the share or a part of a share capital of a company. When the share capital is split into large number of units of the same value, each of such unit is called as a share, and the value of each share is called as its face value. There are different types of shares, but we will be concentrating on two types of shares, namely preference shares and equity shares. Now, let us have a look at the preference shares. The shares which we get, or the shareholder of a preference share gets a preferential right in respect of two things. One being right to dividend, the other being repayment of capital on winding up of the company. Such shares are known as preferential shares or preference shares, where they enjoy the privilege of getting dividend or the right to demand dividend and repayment of capital at the time of liquidation of the company. The second type of share being equity share. These are the ordinary shares. They have no priority to dividend or refund of capital, and the right to claim dividend on equity share only arises when the dividend is declared by the company in the general meeting. Suppose, in case of liquidation of a company, the equity shareholders would be paid only if there is any surplus left after the returns of preference share capitals. There are different kinds of preference shares, namely cumulative preference shares, non-cumulative preference shares, participating preference shares, non-participating preference shares, convertible preference shares, non-convertible preference shares, redeemable and irredeemable preference shares. These are the different kinds of preference shares. Thank you, students.